Good afternoon, everyone. Jason here. Today is December 6th, and this is your ES and CL trade plan review. So the chart that you're looking here is the ES chart. It's a 3-minute chart. We're going to talk a little bit about that chart here, but first let's go through the trade plan for today. So what we said is we were entering into the trading day today that we thought that the market was going to be in this choppy to sideways condition with a bullish lean. Now we put these trade plans, they're published each night at around 8 p.m. Central Time, 8 to 9 p.m. Central Time, and they are posted in the OTG membership area. So again, choppy to sideways conditions with the bullish lean. You can see that we had a higher high here. You did get this one break on the election, but really very quickly rallied out of that. And again, you have a higher high here. Now, one of the reasons that we call this choppy sideways condition is you had this series of this topping formation before we had the sell-off, and then, of course, we've rallied back up. This was the post-election bounce that we've had, but you can see here over the course of the last couple of weeks, we've just been rotational around what was resistance, now support. So again, while we do have this bullish lean, we're still looking for the choppy sideways conditions to prevail, and we'll show you how that came to fruition today. So we had a couple of tactics, strategies here. Again, because we did have this primary strategy was to the long side today. You had this 21.93 half to 21.89 would have been an area to look to get long. Again, though, the secondary strategy is the one that I'm going to focus in on us with here today. So basically, the market, as it was rotating around this 2203, we said that the market needs to rally above 2203 quarter, pull back, and then rally for a breakout above 2203 quarter. All right, so if you look at this green area here, this is that box that we were just talking about. The 2203 quarter is the top here of that green box. So we said that the market needed to rally above this zone. Okay, so we said that as the market was coming in, this was about 1 a.m., market rallies above this zone. You never really get a clean breakdown through it. You get this clean break here. And so let's talk about what this particular pattern you're looking at here. You had a nice bullish run up, the volume at 3K versus the volume here at 2K, 947 contracts versus 871. That's a little bit of a bearish push up, meaning that the volume pushing up was less than that volume pushing down. Again, same thing, 2K down, 1K up. It's not till you get into this area here. You had 14K contracts traded right here, right around the European session open, the London session open. And it's in this area that you're beginning to look now for this breakout according to the plan at 2203 quarter. You have the setups beginning to occur here. You had bearish volume here, so nothing really telling you to get long. You have a bullish push up. You come right back down into it. And again, you're looking for this breakout above 203 quarter. A good entry would have been above this area here, or you could have waited until it cleared out this top here at 2204 half. Market then rallies and really spends the balance of the day into the European session, into the New York Open up here at 2209 quarter. So there was a 5-point move here in this area, and this was identified on your trade plan. Now, one of the other areas on your trade plan that we identified was this move here at 2208 half. We said that the market could move into 2208 half up to 2213. There was a sweet spot at 2210.75. You would look for a short. We have a tactic here, an F1 fade tactic, as identified on your primary strategy here. And so again, because we were talking about choppy to sideways conditions, playing tops of ranges and bottoms of the range would be the way that you would be looking at this. So 2208 half to 2213. Market comes right up into 2209. Pulls back a little bit, you get that weak pullback, and then of course the market comes all the way back down into your support zone again. So again, we talked about the fact that we were looking for choppy to sideways conditions, and there was if you look down here in the bottom left-hand corner, it's an 8.75 point range basically on the day. You did get a little bit of a break above later in the day, but up until that point, it was about 8 points. And it really only finished up at around 12 points. But again, same idea here that we were talking about today. This would have been the same idea, 2203 quarter. Now, I don't know that I would have taken this, and I didn't today. But again, you had that same support breakout above 2203 quarter, and then you had this area that rallies all the way back up into this zone. So your trade plan really provided you with good opportunities on the ES. If you're trading early in that session, it was choppy, sideways, a little bit of difficult conditions today. But again, your trade plan did lay out the framework for the trading day here. So let's talk a little bit now about the CL today. So one of the things that we were talking about here, let's take this same opportunity. Again, same idea, choppy to sideways. You're still inside this bearish formation, which is a rising wedge. That's a bearish formation. You're still inside of that as we were approaching the session here today. Again, choppy to sideways with the bullish lean. And again, because we were in that choppy to sideways condition, we were looking for a break underneath this zone here, which was 51.11. Let's take a look here on your trade plan. We said you had a primary strategy here, 51.11 to 51.0, a secondary strategy, 51.11 to 51.01 with a sweet spot. Sorry about that. Let's move this back here with a sweet spot at 51.10. Market needs to rally at above 51.31 to 51.51 or higher, and the higher the better, then sell off for a breakout below 51.10. All right, so if you take a look here, this little silver line represents the open. The market, we said, needs to rally up to through 51.31 to 51 or higher. Market comes up, gets up through here to 51.60, rotates, comes down into the zone, looking at 51.10 on a break. There's 51.11 right here. Market comes down here. So if you'll notice here, this is a bearish swing down, 7K versus 8K. So the push down was greater than this push up at 2K, right? So a 7K, 8K is better than this rally, is higher on the volume than this rally up. That's 8K. You had a 2K pullback, again, smaller volume. You had a little bit more volume here on this push back here, but you would have already been in because the short was at 50. The short had been identified here at 51.10. So you would have been in there. You had a double top right here, and then the market sells off from 51.10 all the way down to 50.28. So there's nearly 80 ticks of movement here. And as you can see here, every one of these lines is red. Even the pullbacks up are red. And simply what that means is that on these pullbacks, they are not as aggressive as the moves down. So as we were talking about this in the trading room today, there were really no signs or indications that the market was pulling back until you start getting into this zone right here. You had this bigger pullback. You had a bearish pullback again. So you had this rally, a pullback, a slight bearish pullback, but then the market, again, in the choppy sideways conditions today, really just continued to fluctuate between these two support and resistance zones, and that's kind of how you ended up the day. So we had an opportunity where we jumped on board. Here we'll turn these off for a second, and we'll turn on the secondary levels. We had the 1.27% range extension down here around 53. We took a couple of cuts off of this level. You had a breakdown below it here, down into this 36, a pullback into this 53 area, and then finally that moved down to 28, 29. So we took a few ticks off of this area. So we had two winning trades in here today. Not huge gains, but wins nonetheless. And it's really our trade plan that was allowed us to get our way through these moves today. So sometimes, as we talked about in the trading room, sometimes these trade plans execute while we are not together in the trade room, but that's the beauty of the trade plan. They come out at 8 p.m. Central Time, and you have opportunity to take the tools and the trade plans and be able to implement those outside of the normal trading room hours. And what we use that trading room for is to talk about the levels. We trade a little bit off of those levels and the trade plan. And generally speaking, the trade plan is a very good guidepost for you on a day in and day out basis. So as always, I want to say thank you for spending some time watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.